Welcome everyone, this is Michael Lee with Stock Picks Test Group. We're up to week 6 and today's date is the 3rd of January 2017. So we've got 3 trades for this week. We're going to do a little bit different format. I'm going to provide some charts and also some fundamentals of what we look at. The video will run for around 12 minutes this week. It's just to show you what we look at and provide more information on as a better investor or better trader, because you just can't trade just based on a tip. So we do a lot of research and we're going to show some of that this week. Okay, so the first trade we're looking at, I've already put these trades in, but I'm just going to show you how quickly we can put them on. The first one is trading symbol FOLD, Amicus Therapeutics Inc. And so we click on the red icon, CFDs, go to trade, and then if you refer back to the email, I provided the quantities here, which is 1200 shares, but instead of being a limit order, we're going to look at a market order. And the reason we're looking at a market order is because we've been selecting some great trades over the last 3-4 weeks, but we've just been missing out on getting into those trades because we're setting too tight of limit orders. So we like the look of this trade. We're just going to buy it on open. The market looks like it's going to open probably up about 0.5% to 1% in the US at 1:30 tomorrow morning. So this looks like a good trade. So we've got to make sure, however, we do set up our stop losses. The most critical rules for trading is money management, preserving your capital, and position sizing so you can stay in the trade longer. We're going to look at the stop loss here. In the email we refer to a price of $4.23. And I'll show you in the next charts what we're looking at and why we selected those prices. We get a limit order for our profit, which is a $6.60. We apply, it's a buy order at market, and confirm. So that trades in. Now if we have a look at the charts that we're referring to. So I've brought up the chart here. We're using a free program or a free website. It's called tradingview.com. You can see it up here, so if you need to have a look later on, and that's where you enter in the stock codes. But just looking at this stock, it opened the year at this level here, so that level's around the $10 mark, and what it is, it's now trading at $4.97. so that's a drop of 50% in just on 12 months. But typically what happens, the funds, like the superannuation funds, the hedge funds, the institutions, they'll come in and buy this stock when it's at the bottom and then drive the prices up, sell again. You can see the volume, they've sold it again, the volumes here's increased and they've bought it, and now we've had some major volume again selling it off as it dropped down. Now when it dropped down, if we can have a look, it actually missed the earnings, and it might have been like a few cents. But this stock is definitely undervalued at these levels. These gaps will typically be filled, and so we're expecting this stock to close this gap this week. Maybe by the end of the month, expecting to get to $6.50, which is the previous level of now what we call resistance. The level of support is at the $6.50 mark, and that's why we've set our prices. The target price of $6.60, we believe we'll get to $6.75, then come back, but it shouldn't go below $4.50. But if we have a look at the fundamentals of this stock as well, you'll see this website we're using, which is called Simple Wall Street. It gives you an overview of what the company's performance is like, whether they believe it's going to be going up or going down, and whether it's a solid company with cash flow and low liabilities or low debt. So, but just referring back to what we were talking about before, where the institutes will buy, if we can have a look here, a lot of institutions own this stock, and they're just very little individual investors trade this, but it's mainly run by hedge funds and institutions that buy it, so they can manipulate the price a little bit. So you can see this company here, Perceptive Advisors, over the last 3 to 6 months, they've been selling their stock, and now we've started buying it again. And they also put in some more orders on Friday at the end of the financial year. So if you go back to the chart again, that's what I was referring to. This volume is when they're selling it. They'll sell in the stock at these levels. You can see the volume and the levels here again here, and then the volume. But now this volume has really increased down the bottom because they're starting to buy it again. And one of the strategies that these institutions do at the end of the year, any stocks that are underperforming, such as this one, which is down 50% for the year, they'll sell them at the end of the year, take a tax loss, because if they've made gains, they pay less capital gains for the end of the year. And those stocks performing well, they will actually be sold in the first week of January, typically to defer their capital gains, so they have 12 months to be able to pay the taxes. So they wouldn't need to pay the taxes until probably April next year, 2018. The US typically runs their financial year is from January to December. So that's why we like that stock. We believe it's going to be a good trade. We've put a low risk in with the potential risk. The downside is around 50-60 cents. The upside's about $1.50. So the second trade we like for this week is Fitbit. The trading symbol for this stock is FIT. Again, it's in the email, just outlining our levels. So we're going to place a trade here. So I've already entered the quantity here, which is 800. We are looking at just a limit order on this one. The price we're going to buy this stock at is $7.35. And we're going to make sure our stop loss is set. And we're going to give ourselves a little bit more room on this one to drop if it needs to, and it's $6. And with a profit target of $9.19. So we just got to change it. $9.19. So that all looks good. We're doing a buy order. Press play, confirm, and that trade's done. So if we have a look at the chart for this, it's very similar to the one that we've just seen unfold. So this stock started trading the year at around $30. Alright? But it's fallen down to $7.32. I think it's at a low of $7 for the year. So that's a huge drop. It's about a 75% drop for the year, but the fundamentals of this stock are quite sound. And also we've had some gaps. So this actually gapped down, missing out on earnings report, and also a gap here, which typically they get filled within a time frame. So this gap got filled by September. So it took about 4 months to get to this level, but then it filled that gap with a gain of around $2 or $3. But this gap now here is $5. We feel that the volume is starting to come in. The fund managers would have sold this stock off because it was underperforming, closed out the losses for the year against the gains, and now they'll start buying bargain stocks in the first week of January. And this would be one of those stocks which should be at bargain levels, discount prices. And I'll show you the fundamentals using the simple Wall Street website. So here's the information on Fitbit. It tells us what the company does. Here's its competitors, which are major competitors. And these stocks here are up in the $50, $100 mark. This stock here is down at $7.32, so it's quite undervalued. So if we scroll down to what the stock value is based at, with analysis doing the research and based on future earnings, they believe this stock is worth $23.35. So it's a fairly, it's been discounted quite heavily. We like the look of this stock. That's one of the things we're looking at for this week. We believe there's low risk, so it should get a good return for us in our test group. So we're looking at this stock to close out at $9.19, and then when it does, which is just this small move here, it has the potential to fill this gap as well. So we will look at getting in this trade probably a second time, but for now we're just looking at hitting that target of $9.19. And the third trade for this week is NVDA, and the trading symbol for this is NVDA. We're going to take the CFD trade. I've already entered the quantity here, so we've nominated it's going to be 100 shares, but we're looking at doing a short sell. We believe this stock is overvalued and it's going to come back. So when it comes back, we make that difference. That money is not lost, it actually gets transferred to hands from different traders. So we believe this stock is going to go down. We're going to set a limit order $104, and I'll show you in the chart why we like that level. And then also we're going to set our stop loss above that price of $110, with a profit target dropping down to $90.50. So we're going to apply that. We're doing a sell, so you're not in the blue. We're doing a sell order on this one to open the trade. So press the sell, confirm. So we're just looking at 104. We've got 100 shares, limit order, and there's our stop loss and there's our limit. Yeah, all looks good. Confirm. Okay. Now looking at the charts, as I mentioned, this is a little bit different to the previous one. So this is a reverse strategy. This stock has started low and rallied about 300% in 1 year, which is a massive run. So it started the year at around the $30 mark or $32 mark, which is just here, and then broke out back in May when the earnings come in. The volume increased, and then your institutions started buying this stock and pushing it up. Now they had a last push here just as Donald Trump won the election. This pushed this stock back up as well, but now we believe it's overvalued. So it's hitting what they call a support level just here, which is a $104. If this stock breaks below that 104, which you can see good volumes coming in now, we expect this stock to move back to the $90 mark, which is why we set our profit target at $90.50. So if you look at the fundamentals, you can see it's an outstanding track record with high performance. It's up there with, you know, quality companies as well. But let's have a look at the value of this stock. You know, what's it's worth based on its incomes, potential earnings. So at $107, the analysts have forecast this is overvalued, and they predict the fair value, the right price on this stock, is your $44. So that's the reason we like this trade. Again, it's just a reverse strategy, but typically the fund managers and the institutions will sell off stocks that are performing well, defer the profits for next year. So this is just one strategy we're looking at. Again, we believe it's a low risk trade, and we're setting our stop losses in place. So yeah, look, thanks for your participation. I hope you enjoyed this different format for this week's video. Any questions, send me an email, but I've also set up a WhatsApp group. So as we execute the trades, we'll see trades throughout the week. We'll send you a link or a post on WhatsApp. So all the best, happy trading, have a great week, and I'll talk to you next week. Bye for now.